Hey miners, welcome back to the channel McNallie Money, the new home of power mining analysis. In today's episode, Anthony Power and I are going to be doing a deep dive analysis into IREN's recently announced financial results. We've got a lot to go through in today's presentation. Anthony's brought along some of his famous tables and charts, plus we're going to be covering big headlines from the previous week. Now before we get into all that, please take a second, smash the like button guys, huge help to myself and the channel. Anthony loves it. If you're not already subscribed, McNallie Money, feel free to join and let us know in the comments section below if you're currently holding shares of IREN, what you thought about their results, and your outlook for the last few months of 2024. Now with that being said, let's get into today's video. Okay guys, so that's right, you may have guessed it, we're covering IREN today. They just came out with their full year results. Anthony and I took a few days to look these over. You'll see why later on as Anthony's put together some comparative tables that I think you guys are really going to like. Anthony, we've got our IREN gear on. I've got the t-shirt on today. You've got the hat. A little bit of a backstory there, Anthony. I was actually up mountain biking on the weekend and took a spill. So I've now got a broken wing here and I'll be back on the t-shirts for a couple weeks. You're sporting the IREN hat as well, and I know we ran into them down in Nashville. Before we get into the earnings, how are you feeling just about the company in general and the interaction we had down in Nashville with the team from IREN?
Yeah, it's great to meet the guys down in Nashville. It was quite interesting. They had if I remember right, they had the stand with the coffee as well, the automated coffee maker. And the queues were quite long for it, so there's plenty of people getting the opportunity to try it out. And it was right next to the probably one of the best sites in actual Nashville, which was the car sponsored by CORZ Scientific. So right in a good position for IREN. Got to meet some of the guys down there, managed to get a couple of pieces of black from them. So it was it was good.
Yeah, I was hoping you'd bring up the coffee machine. It was a sight to be seen. I should have got a video, and unfortunately for you, it's a bit hard to get swag across the pond to the UK, so it's glad that you were able to get some. Now, IREN just came out with a big earnings release. Not only was it their full fiscal year, but they also came out with Q4. So we've got a lot of numbers to dissect here today, Anthony. A lot of people obviously really excited about the results they've seen from IREN. Dan and team giving a very bullish update on their construction progress, on their exahash goals, and a lot of institutional interest as well. I saw that Dan, I believe, was on CNBC, over 68,000 views on the tweet itself. So starting to hit that mainstream media, starting to get the Wall Street investment bank attention that we've all been hoping would come to this space. So I'll open it up there, Anthony, and I'll let you walk us through maybe some of the highlights here.
Yeah, I mean, it's actually quite an amazing story. I mean, Dan reached out to me towards the latter part of 2021 when they IPO'd, and I believe at that time it was like they had half an exahash, so they were definitely the smallest miner that was in my group at the time, all competing with the likes of Marathon and Riot and Bitfarms and Hut. But you've seen over this last 2.5 years, there's been a few bumps in the ground, but they've navigated this space really well, and the journey's been certainly in this last sort of 12 months, we've seen a real increase now in the hash rate. I mean, if you think about where we're at the start of the year, they've more than doubled the hash rate from the start of the year. They're going to double it by the end of the year from where they are today. And we're waiting for not only the earnings, but sort of to have an idea of where the company were going to be in terms of hash rate. And they didn't disappoint by informing us that they're at 15 exahash, and they achieved that towards the latter end of August. So that's over 4.5 exahash since their last monthly update, which was at the beginning of August itself. So that's an amazing feat to do that. And listeners will know that I've been fairly positive on the hash rate growth for the likes of IREN and the likes of Riot, because you're managing everything on one site, and therefore you can actually navigate that process, project manage it, get the right number of staff in to meet targets, And the plan's easy when it's on one site. If you've got multiple sites, that's where you've got a little bit more risk to achieve things, because you're then relying on more moving parts.
And
But
funny enough, Anthony, just to throw in there, you guys, you'll remember this too, when we had Dan Roberts on the program, Anthony, and we were saying, wow, 30 exahash, that's quite a target. And he said, no, boys, all I have to do is plug in my machines. It's all in one location. We've got them ordered. It's simple. And you and I, Anthony, gave a good chuckle, but it appears he's a man of his word, and they are plugging in those machines.
they are, and they're going to have to come out with an equally good update in less than sort of 30 days' time, because end of September, their target is 20 exahash. And so that will give us a real indication of how they're set up for the last quarter of the year. But after this update, I'm more than certain. We've seen the photographs, and I've articulated this before. The photographs of Childress as the additional buildings are being built, and machines are going into those buildings now a more rapid rate of knots than they were for the first 5 buildings. So you've obviously got that learning curve in place. They can learn from how they've done the first 5, learn what works really well, utilize that there, and at the same time, write exactly the same with Corsicana as well. As you grow in one site, that learning curve kicks in, and it becomes a little bit easier. You can see what works really well and then keep to that plan. So I'm expecting, or fully expecting, a really good update by the end of September as well. Aside to that, so in terms of hash rate, 15 exahash. In terms of power, they're operating 300 megawatts of power throughout all their sites now. So again, that's a significant increase. And by the end of the year, they're going to be at 510 megawatts. So again, getting into the into the space now as one of the biggest operators of data centers. If you look at what their total power capacity is at the moment, so they've got the Childress site, and they've got the sites in British Columbia, and a few other smaller sites. They've actually got 2.31 gigawatts of secured power capacity. Now, one of the sites with 1,400 megawatts of power available on that site hasn't been, is not turnkey ready for data centers at the moment. So that site would have to be completed and built out. But it is part of their portfolio at the moment. They've also got another 1 gigawatt development pipeline. So should the need arise, and bear in mind they're now employed Morgan Stanley on working for them to achieve their AI cloud services contracts. So to utilize some of this power that they've got to see what's out there and get these big data centers for high performance computing up and running. So yeah, so based on the and great that IREN issued their quarterly results as well as their annual results. For IREN, this was their full year results, and generally, when a mining company sees full year results, it doesn't really show the recent quarter. They have to get these results audited, so there's a lot more work involved. Hence, they came at the end of the month, so a month later than some of the miners have started issuing at the end of July. But in terms of quarterly position, great amount of revenue from mining, from the cloud services as well. So over $57.5 million of income. That gave them an adjusted EBITDA. So this is taking out those one-off costs there of 12.2 million. So there's a margin there, adjusted EBITDA margin of 21%. Now, one thing we will say is post these results, IREN had a hedge at their Childress site for energy. Now, based on the previous year where they took out a hedge against the energy price in terms of it spiking during these hot months, they were able to benefit from that because the heat and the demand was so high that the energy price spiked significantly. And I think last year, the same month last year, I think it was July, they didn't actually end up paying any energy costs because of the benefits they received from doing their strategy. Now, they tried this year again to implement a hedge, and as we highlighted at the end of July, it didn't quite work out. Effectively, it cost them probably just under $4 million for the month of July in terms of the energy cost to mine a Bitcoin compared to the previous month. And in their results, they've updated the fact that they've decided to pay a 7.2 million fee to get themselves out of the hedge for the months of August and September, and basically go on to the like a spot rate for energy. And most of the mining companies are actually using the spot rate there. So the spot rate will be the rate at the time. Energy prices change very, very quickly. I think they change every 15 minutes in the likes of Texas. And so, generally, with mining machines, the ability to turn off very quickly, these mining companies can switch down if the price spikes. So they can turn off and can tell really quickly when the price drops. And we know in some times of the year, the price drops to less than zero. So there's a negative effect, and they can benefit from that negative effect in terms of paying that spot price, or not having to pay any price because they can just mine for free effectively. And so that cost, 3.8 million in July plus the 7.2, that's probably about 11 million additional costs that they probably weren't planning to have, and we'll probably get Dan just to clarify that when we get him on the call there. But the positive thing is they take out short-term hedges. So this wasn't a long-term hedge. This was a short-term hedge based on what they believed, that from previous years, how the energy price would spike and how they would potentially benefit. So,
Gotcha.
So I just wanted to put that in there. So apart from having some good results, there was a sort of a bit of news that had a bit of a downside, but it's a short-term thing. They've managed to get themselves out of it. And at the same time, they've just highlighted again the fact that they're at 15 exahash going to 30 by the end of the year. So, it's a short-term issue, but I'm sure they will have learned
Yeah.
a very, very, very good lesson from.
An $11 million whoopsie, or an $11 million lesson. 2 points I was going to say there, though, Anthony, is one, ironically, I just read an article saying that it was actually the Bitcoin miners and a lot of the additional battery power in Texas that led to those reduced volatility or reduced fluctuation in pricing this year. So ironically, IREN was betting that prices would be a lot higher, but it was actually companies like IREN that were able to balance that grid. The other thing I wanted to mention, you guys, is hedge is a fancy word. It sounds very nice. Essentially, it's a bet, right? So at some point, you're going to win, you're going to lose. IREN obviously thought history would repeat as or similar to last year, and that just wasn't the case now with the grid. Good news, though, Anthony, like you said, they've learned their lesson. They're out of that situation, and hopefully those same factors help to bring down the power cost for the next few months here as well. So great
Absolutely.
point. And again, good on IREN for putting that level of detail. We can never diss IREN for transparency, Anthony. They are one of
Absolutely. No, Dan came out immediately when the announcement was made, said they'd made a mistake, then said they would try to look to, alleviate this. And, by going on the spot rate now, they've even articulated now that they're gaining energy at probably just over 3 cents a kilowatt hour. So, in that sort of cipher TeraWulf position at the moment there. But it's a lesson that, they've learned, and other miners will have seen what's happened there, and everyone in the space will have learned from that mistake there. But believe you me, if I was to stand here or sit here and go through mistakes that every miner's, and believe you me, there's been a few howlers, every miner's made in the last 2 or 3 years, I'd be sat here for about 16 hours with you, Bryce, going over each one. Because
well, to be fair, we've all made mistakes.
We've all made mistakes, so this is just one. This is one that's it's out there. But Dan was very quick to come out and with the transparency, and we like that. And so yes, it's going to impact on their Q3 results. We know that, but everyone knows in advance of that. So it's what they do from now going forward that will be important.
I just keep thinking Dan could have had himself and his brother one of those brand new private jets, Anthony, for 11 million.
11 million, that rings a bell.
Yeah, I appreciate you walking through that. There was definitely a lot to unpack in this earnings release. I wanted to zoom in on the AI cloud services because, as you mentioned, Anthony, this is a real growth area for the industry. We're all waiting here for one of these companies to announce a deal with a hyperscaler or a Magnificent Seven. There's a lot of rumors going around. I feel like we're very close to one of these announcements. IREN actually came out and said they're launching their GPU pilot in the second half of this year, or have, sorry, in the Childress location. So they're making a play on AI HPC. They also provide an update on the poolside contract. So if we can maybe just double click on that one, Anthony.
Yeah, absolutely. So, yeah, they're launching, the GPU pilot in the second half of this year. With regards to poolside, as of yesterday, poolside have now using other providers and consolidated some of their clusters, and that's for more strategic reasons for poolside. However, IREN have got a couple of other customers, and they're obviously going to be in conversations to utilize some of that capacity that they've now become available. I mean, you can see, sort of in the first 7 or 8 months of this year, how their monthly revenue has increased month on month. And if you look at sort of the July update, which came out a few weeks ago, and use that as an annualized position, you're talking over 15 million of annualized revenues. And this is from what they've got at the moment. Now, if they can utilize some of that capacity with the 1.4 gigawatt site, the 1400 megawatts they've got available, that would need to be turnkeyed into a site available HPC hosting, and have some sort of like similar infrastructure hosting deal that the likes of Core Scientific have already gone to the market with. Then that's got some real potential. But we'll hear more about that in the future when Dan's ready to give that information. But
Sure.
it appears that they've got good demand for their services, and so they've built some really good facilities to deliver this HPC. And yeah, we'll just wait for the next update to come out and let us know what the revenues are post the cooling off with poolside.
Sure. Now, Anthony, before we get into your comparative tables, one other question I had for you, maybe for people who are newer to the HPC AI field or newer to the IREN story, can you just give a quick compare and contrast of the Core Scientific model versus the IREN model in terms of how these AI HPC data center contracts are structured?
Yeah, they are different. I mean, looking at the Core Scientific deal itself with CoreWeave, Core Scientific are refurbishing some of their current data centers, and we were fortunate to be at one of those data centers in June at the Denton facility, where actually during that conversation there we kept it quiet to ourselves, but I managed to inadvertently ask the right question, and one of the engineers came out and effectively the answer informed me that Denton was going to be one of the sites for HPC, because my question I asked him said, when you move the mining machines out of this facility to another facility, is it easy enough to transition to get to transition your miners from here into new facility? And it's absolutely yes. And all of a sudden, I could see in the corner of my eye the operations manager coming up, go, stop. But we kept to our word. We weren't going to inform that information in the public domain. But now that it's become public, of course, Core Scientific announced this week that they're definitely the Denton facility is definitely one of their HPC sites. It's out now, so we can actually say. But yeah, that site is it's all about providing a level of HPC hosting. CoreWeave deal with the energy provider, so there's no risk to Core Scientific on that grounds there. And CoreWeave provide all the GPUs. Now, in terms of the IREN deal at the moment, what they're doing with their customers is they are building a sort of like a tier 3 facility, so a really good facility for HPC AI services. They've bought the GPU, so they've bought 816 NVIDIA H100 GPUs, and they are selling the use of that power on a demand basis. So, you know, you can go in there if you want to be a client, you can go in there, you pay for a service, you have access to that power to deliver what you require. And so, you know, it's down to IREN. They'll have a sales team who are dealing with, you know, the selling of that service. So dealing with clients to deliver, you know, a certain amount of power for each client. Now, they did have the one big customer first, poolside, but we knew it was only a short-term thing. I think initially it was 3 months with a couple of months extra, and they've managed to go through that period now. And now they'll be looking for other clients. They have got a number of other smaller clients already on the books, and they'll be looking for more clients. But it's not a real, you can't really compare that type of a deal to the one that Core Scientific did, because Core Scientific don't have to go out there and think about the capital involved in buying GPUs. And I know that, I think Dan on one of the podcasts highlighted, it's not, you know, to buy these GPUs, they're significantly more expensive than going out and buying, you know, Bitcoin mining machines. You know, you're looking, you know, at tens of millions of dollars for even the NVIDIA H100s that IREN have got. I think it's about $30 million worth of GPUs there. So that's a significant cost that you have to get, obviously, then a return on that cost. But once you've got them installed, the energy supporting this delivery of the service is really, really low. It's a lot less than Bitcoin mining. So I think Dan put some figures up when they first started doing this demand service. And I think if you look at the revenues, it could have been like sort of, you know, $2 an hour per GPU. And you look at the energy costs associated with that, it was like literally 6 or 7 cents against that $2. So you're looking at over 95% margins in terms of the energy, but you have to have gone and bought the GPUs in the first place. So there would be a cost associated with that there. And obviously building the facilities, they have to get a return on that then. How long are the GPUs going to last for? So for me personally, I like the Core Scientific deal because they're getting the money from CoreWeave to develop these sites into sites that are suitable for the service they're going to be provided. They're not going to be tier 3 facilities, but then they're not going to be getting tier 3 revenues, but they're going to get good revenues. And we've already mentioned this a number of times on our podcast. I mean, the deal at the moment is in the region of 6.7 billion over a 13-year period. And the once you take all the costs that will be incurred into consideration, you're left with a profit of about 4.7 billion. And that's based on 382 megawatts. So they've got another 118 megawatts to allocate. And I believe that CoreWeave have probably got another few days to utilize their option to increase to 500 megawatts. So we may hear some news next week.
Yeah.
It still sounds like from Core Scientific's perspective, when we spoke to them in June, there were a number of potential clients that were coming in looking for certainly like 100 megawatts. So CoreWeave have got the initial option to increase, but once that option runs out, I mean, it's pretty much open season. And that'll be interesting
to see who picks up that remaining 118 megawatts. Wouldn't surprise me if CoreWeave did, but as you say, Anthony, there's a lot of clients out there. Appreciate the breakdown there, you guys. It is important to compare and contrast. And Anthony, you're right. Building out your own AI HPC facility with these H100s is no cheap endeavor, but if you're able to stand it up, get it going, the revenue and the margins are definitely very, very lucrative. So it's nice to kind of walk through those two. Now, next thing I wanted you to walk us through, Anthony, is income statement comparison. So you've put together a nice little table here of really the big players in the Bitcoin mining space, talking about revenue, gross margin percent. The interesting stat to me, I guess, on this table would be the enterprise value to revenue ratio, which we can talk about last there. But a great table as usual, Anthony, and on behalf of the entire mining community, we love when we get these from you.
Yeah, so obviously IREN's results came out, and actually it was great to see that IREN had put their quarterly revenues in their presentation, so I was able to extract those. and then you can do a comparison. So looking at total revenues, you would expect the likes of some of the big miners like the Marathon, Core Scientific, and CleanSpark, who effectively mine the most Bitcoin in that second quarter, to have the highest amount of revenues. Interesting enough, on here, I haven't got Bitdeer on here, but I think they were also very close to 100 million as well. So that gives you an indication of how big Bitdeer are when they're delivering the same amount of revenues as Core Scientific did. Sorry, CleanSpark did in that quarter. So that's an interesting fact, because self-mining for them isn't their biggest part of their business. But IREN delivered just over 57, or just under $57.5 million in revenues. The margins there, you can see that the difference in margins. Now, you would expect, we've talked time and time again about who provides the cheapest energy on the market. And, look at Cypher Mining, their margin 61.2. Look at TeraWulf, 60.9. IREN delivered 55.3 in that quarter. CleanSpark at 56.6. And then Bitfarms at 51.7. And then you've got the likes of Core Scientific, Marathon, and Riot coming a little bit lower than that. Now, in terms of loss, there was going to be no winners effectively in that quarterly period there, especially those that had significant Bitcoin hodls, because as in quarter one, they were able to benefit from the FASB rules. In quarter two, the Bitcoin price dropped from 71,000 down to 62,000 at the end of quarter two. And therefore, when you've got a 9,000 drop in valuation per Bitcoin, the more that you have on your balance sheet, the more it's going to impact you. So you can see some of those losses there are quite considerable. The Core Scientific, that loss there is effectively like a paper loss, because they've got some warrants on the balance sheet, and basically if the shareholders haven't exercised the warrants, then those warrants are still valid. They have a value, and effectively that's shown there. And I think the value of the warrants is just under 800 million. So if you'd have took that out of the equation there, their loss was actually quite low. They had a positive cash flow for the period as well. So I don't want to, it might look bad on there in terms of a loss, but it was a sort of like a non-cash loss itself. And, even though some of these losses are, look at the likes of CleanSpark at 236 million loss, and the max of Marathon at 199. They had significant non-cash amounts, in terms of depreciation, in terms of stock compensation, in terms of the unrealized losses of assets or Bitcoin applied to their position as well. So, and also the likes of Riot, because they've got a significant hodl. So that's the reason for the losses. No miner effectively, if you look at the valuation of Bitcoin, no miner actually made a gain. Hive did report a gain. Hive Digital reported a gain of, I think, about 3 million. But the next line below that was the actual unrealized loss on their Bitcoin holdings, and that loss was about $20 million. So they had like a net position, or a net position, of about minus 17. So nobody was exempt. A loss for quarter two. And obviously then you've got the loss per share. So if you look at the likes of Bitfarms, because they've got a significant amount of shares, a low share price, their loss per share is 7 cents. And look at the Core Scientific, because of that paper loss there at $4.51, that was the most extreme the other side. Adjusted EBITDA is basically reconciling the net loss to an adjusted position, which really strips out any one-off types of costs. So again, it's the likes of depreciation, the likes of stock compensation, the unrealized or realized gains on assets, they get stripped out. And so therefore you can see the majority of the miners then are starting to actually make a positive adjusted EBITDA, so taking away some of the one-offs. But the likes of Marathon again and Riot both had losses in terms of adjusted EBITDA. So again, it was the position for quarter two didn't really help all the miners. Cypher Mining also made a loss, but you've got some positive stories there. So Core Scientific, once you stripped out all those things I was talking about, they had an adjusted EBITDA of 46 million. So that was the best performing in terms of, position for the end of Q2. TeraWulf also had a good position there, 19 million. And Bitfarms and IREN also were positive with 11 and 12 respectively. You rightly mentioned the enterprise value divided by the revenue. So the enterprise value takes the market capitalization of a company. It adds any debt to that position there. It removes any cash, and also I include the Bitcoin value because Bitcoin can be liquidated at a moment's notice. So cash and cash equivalents, I've included Bitcoin in that. And then you get like the enterprise value. The enterprise value divided by the revenue then gives you sort of like, from a valuation perspective, how many times your revenue, how many times your revenue is divided into that enterprise value. And so the smaller number, the better position to look at. So if you look at Riot, with only 15 times revenue is their enterprise value, and compare that to say the likes of TeraWulf enterprise value, and then see how much the revenues, how much is revenues derived from their enterprise value, and it would take 46 times more revenue to deliver the amount of enterprise value that they have on the balance sheet. So those with the lowest number are looking from this particular metric looking good there. So also look at Bitfarms there, look at CleanSpark, look at Core Scientific, look at IREN. So IREN again 19, Bitfarms 19. Those at the higher end, you've got Marathon at 26, Cypher Mining at 25, and TeraWulf at 46. But yeah, as I say, we were expecting some of these numbers for Q2. It's all based on the Bitcoin price. Bitcoin price today hovering around 59,000. So again, it's a problem. We've got another month before we get to the end of Q3, which is the July through to September period. So if we don't see an increase in the Bitcoin price, we're going to have a challenging set of earnings for the next quarter when they're released, sort of towards the end of October, November.
Yeah, most definitely. No, that's great, Anthony. As I say, these tables are very valuable. Now, the next one is the balance sheet comparison. So a couple call outs on here, you guys. The current ratio, Anthony, you can explain how that works. But I know last time you were saying it's actually obviously great to have enough current assets to cover current liabilities, but at some point you actually want to see those assets being deployed. So maybe you can speak to that a little bit, as most of these companies are looking pretty healthy from a current ratio. And then the other thing I really like when you do this table is you do an enterprise value to current exahash and then to future exahash or hash rate. So Riot looking really interesting there, but we'll talk about that. Obviously, they haven't expressed any interest in HPC AI. Megawatts are more valuable in that specific use case at this point in time. So that may have something to do with that current ratio. But Anthony, I'll let you go through this sheet again. You're the expert here, but again, great information to compare and contrast these main players in the mining space.
Yeah, so current ratio really looks at the amount of current assets. So these are assets that will be, liquidated in the next 12 months, and any liabilities that are due in the next 12 months. So what you want to see there is you want to see is at least the current assets being equal to or more than the current liabilities. You want to make sure that you have sufficient assets to cover your liabilities, as I say, over the next 12 months, because that's the current position of the business there. And you're quite right. Where you see, say, like for instance, TeraWulf, have got enough to cover their liabilities at $1.2 for every dollar of debt. Then look at likes of CleanSpark, who've got nearly $9 of assets, current assets for every dollar liabilities. One could argue that they're not utilizing their assets as well as some of the other miners. But at the end of the day, if you think about CleanSpark, what they've done over the last couple of years is they're actually building their cash treasury because they're going out there and at the appropriate time buying assets, buying more mining machines, And so it might be a case of there's money there sat ready to be deployed as and when it's required. So, there are different strategies at play here, but it looks from a current ratio position across all those miners that the majority are extremely in a healthy position. I mean, bear in mind, look at Core Scientific, having just come out of Chapter 11 in January the 24th, and they've got over $1.58 for every dollar of current liability over the next 12 months, and they've done really well this year to keep costs down, to drive revenues through their self-mining, to get these big contracts with CoreWeave. It's been a good news story all year round for Core Scientific. Moving on to enterprise value, I talked about this in the last slide, so I won't go over it too much there, but using that calculation, market capitalization, add the debt to it, take away the cash and cash equivalents, take away the Bitcoin hodl, gives you an enterprise value. And so if you look at the enterprise value, you can then compare which miners are sort of like the best in terms of when you're looking how much you want to deploy to buy an asset. So if you were to say, bear in mind Riot's market capitalization of nearly 2.3 billion, but because they have a massive amount of cash and a massive amount of hodl on their balance sheet and very little debt, the enterprise value for them is only just over $1 billion. So for a $2.3 billion company, if you're investing $2.3 billion, it's actually only costing you about just over $1 billion to acquire that. Looking at, say, Marathon, if you were to invest effectively $4.9 billion in Marathon, you're effectively spending about $3.8 billion to get that. So their enterprise value, is a little bit higher. I'm trying to think of one here that's they're all looking, in terms of debt. I mean, Core Scientific, that position on there is the position as at the 30th of June. And we know since the 30th of June, for a number of these miners, that position slightly changed. So in terms of debt for Core Scientific, they were able to use that convert some of their notes into shares. So they got rid of $260 million of debt in July. They've also got to a position now where their Core W warrant can be exercised by shareholders. So as the shareholders now start converting those warrants, the money that's received for those warrants will be used to increase their cash position. They've just took out 460 million in convertible notes at a percentage of 3% for the next 3 or 4 years, and that's reduced all the other outstanding high-risk debt there. So their debt positions, this is as at the 30th of June. So I want people saying, oh, it's not the same now. TeraWulf also don't have very much debt on their balance sheet because they've paid all their significant large debt off in July post this position. But this is the position as at the 30th of June there. And actually, if you think about it, if they've paid the debt off in July, the debt would reduce on there. That 84.9 million would reduce down to a much lower figure. However, their cash and cash equivalent position by paying that debt off would also reduce by. So it's a double entry. So it's not like people come out and saying, it's 84 million, Anthony, the debt's zero. Well, the debt might be zero now, but the cash wouldn't be 104 million if they've paid it off. So remember, there's two sides to every transaction. So on here, as at the 30th, this is the accurate position. This is straight from their balance sheet. So then we start looking at sort of, looking at the net asset position for each of these companies, and quite a few who've grown significantly have started to grow their net assets as well. So if you look at, we've just gone through IREN, their net asset positions increased significantly, and rightly so, because at the start of the year they were only just over 6 exahash in terms of hash rate. Now they're at 15 exahash. So when you've increased, your facilities, increased the amount of machines, you're increasing the assets. And also remember, they've got very, very little debt on their balance sheet. I mean, we're talking about some small operating leases of, totaling $1.7 million. So of all the miners, they're in that sort of bracket with the likes of Bit Digital from a debt position. Market caps and net assets. Again, if you've got a market cap equal to net assets, so if that's 1, that's a really good position to be in. So what that would tell a shareholder is for every pound I've invested in that company as part of that market capitalization, I've got a pound of assets, and that's where you want it to be. That's great. If you can have a pound for a pound in the position here. So out of these here, if you look at Riot, for every 88 cents you've invested, you're getting $1 of assets. So that's a really, really, really good position. The converse of that, in terms of TeraWulf, if you're investing $4.32 in TeraWulf, you're getting $1 of assets for your $4.32. So that's the way to look at it. With Core Scientific, again, because of their coming out of Chapter 11 and some of the way they have to put their balance sheet together with some of the non-cash costs that are included in there, it does slightly skew. So as at the 30th of June, they had a negative net asset value. Now, that's not strictly true. They've now cleared a lot of the debt, and they have effectively 20 exahash of self-mining plus another 6 exahash of hosted mining, and they're going to have this massive deal with CoreWeave. So what you'll see is over the next few quarters, as we start getting into 2025, Core Scientific's position will become a lot more stronger. As some of these things are taken away, as more people convert their shares, it will give them more cash. It will reduce that warrant position, which is about just under $800 million, and so it'll make their position a lot more rosier. Bitfarms, again, Bitfarms. So from a valuation, for every $2.22 you're investing in Bitfarms, you're getting $1 of assets. So people constantly, since the announcement that we're looking into buying Bitfarms, from a value perspective, you'd say that actually out of these here, the company that's showing the best value is actually Riot. And if you looked at the first page, we talked about enterprise value to revenue. Again, it was the lowest number there. Now, part of that reason is we've seen the Riot share price, along with Marathon, along with CleanSpark, since the announcement of the HPC deals. Their share price hasn't grown anywhere near like some of those other companies. So if you look at Core Scientific share price, look at TeraWulf share price, even since the start of the year, they're in positive territory. I think they're the only two, maybe there's 2 or 3 in positive territory since the start of the year. The rest of the shares are actually negative period. Riot's the worst performing share this year. I think it's about 50% down since the start of the year. So that would be part of the reason. But what that would say now is, actually, does Riot now become what they call a value play? Because it looks, in a number of, not just one metric, but in a number of metrics, it looks like it's potentially one of the cheapest stocks to buy. And as the price is just under $8 a share, it certainly is looking at a value play. Debt to equity, it says what it is there. So how much debt compared to the market capitalization. So you're looking for a small number here is better. And actually, to be honest with you, all those miners there haven't got significant amounts of debt. Again, with Core Scientific, we know what debt they've got. They've got the $460 million in notes and a little bit more of other debt there. That's a low percentage rate. So it's not quite reflective of what's shown there, but because of the coming out of Chapter 11, this will take a few more quarters to sort of like get to a position where it's showing the true reflective value. But all the rest are low in terms of debt there. So even like, the likes of Marathon, and we know they've got some debt on the balance sheet. They've actually increased that debt since the 30th of June. So they took out another 300 million to buy Bitcoin. So again, their debt would have gone up, taking on those extra notes, 300 million, but also the HODL would be increased. So when we know what they've got in their next production update, they'll show their true reflection. I think it's close to 25,000 Bitcoin. This Bitcoin HODL here only reflects their HODL at the end of July, which is the last set of numbers they brought out. So in the month of August, they've purchased, I think it's $250 million worth of Bitcoin. So some of these numbers will change in the next quarterly period. But all very, very good from a debt to equity ratio. No real standout problems there.
And
The
it's a
final
good
bit on
point you
here is
bring up,
really,
Anthony. It's a good point you bring up that there's a debit and a credit to every transaction. And listening to you walk through these numbers, it's important as well, you guys. Looking at this, you may say, hey, Riot's looking very attractive as a valuation play, but just keep in mind some of the fundamental differences of these companies as well, right? Whether you're more bullish on HPC or Bitcoin mining. And another metric that we're going to get into next here, Anthony, I think is the current exahash to enterprise value and future exahash, which is another metric that would skew or bias, I guess, towards kind of the pure play miners, eh?
so this is a metric I've been using now for a few years now, actually, and it's becoming more adopted out there. I've seen a number of other people starting to use it as well. But looking at your enterprise value, because it's the best metric rather than market capitalization, enterprise value takes account of the cash and the debt on the balance sheet. So it's looking at a fair reflection for every miner. So giving them the same sort of starting point for every miner, and then looking at the current hash rate they've got there. So you can look at Bitfarms there with their current hash rate, just over 11 exahash. And they've got a value of $71 million, $71.3 million for every exahash that they have deployed at the moment. So that's from their position there. If you go to the likes of CORZ Scientific, that's $160 million per exahash. But again, I would wait for the next couple of quarters for CORZ Scientific, because there's a lot more things going on in CORZ Scientific. That number will reduce. Enterprise value will start to improve as we see these next few quarters. Cypher Mining and CleanSpark, again, at the moment, they're the pure play. They haven't got an HPC either at the moment, but they're over 100 million per exahash. Marathon over 100 million. TeraWulf 165 million. Well, we've seen the TeraWulf share price really do well these last few months now. It's done exceedingly well, and got them into a position where they could actually utilize their ATM to sort of clear some of the debt and put them in position to get what they need to do there. So that's 165. So in terms of, again, it's another metric that shows at the moment, just based on sort of like the self-mining news that's out there, that TeraWulf are in terms of value per exahash are one of the highest. Then we go to the opposite side, that look at who's in the best position. Again, it comes back down to Riot. So if you look at Riot's value per exahash, only just under 45 million. Now, I haven't included some of the smaller miners in this table there, because I just wanted to be able to show quite clearly a number of metrics based on IREN's results and do a comparison of similar companies. Those companies sort of like close to 10 exahash and above, really, just to give you a feel there. But I know some of the smaller miners will have as low as Riot, or even lower in terms of value per exahash. I think we've done exercise on Hive Digital before, and that's come out really, really low, because their market capitalization is low. They've got a load of Bitcoin on the balance sheet. They've got not so much debt, so their enterprise value is quite low, and so they would be sort of competing with the likes of Riot based on their market capitalization at the moment. And then people say, well, actually, Anthony, what about the value if we were to look at all their hash rate that's going in this year? So I've done a valuation based on hash rate at the end of the year. And so you can then see how that's affect there. So, if you look at the likes of, Bitfarms, when they get to their target, which is quite significant. So 21 was the original target. I think with the additional 4 from Stronghold now, so they've got a target of 25 by the end of the year. That brings their value per exahash right down to like 31 million. And all the miners effectively, because they're growing hash rate, these miners are anyway, these are the bigger miners, and we've talked before about those that can, those that can't. These are the ones that can. You can probably add the likes of Bitdeer to this as well, in terms of growth. But these ones, if you look at the second line there, they're all reducing from their original position. Now, Core Scientific aren't growing their hash rate in terms of total hash rate, but what they are doing is they're growing their efficiency of their hash rate. They've got a contract to deliver something like 15 exahash with Block, and that will be to replace some of their older fleet. So replacing some of the older fleet with more newer advanced miners will give them hash rate plus fleet efficiency as well going forward. So it reduces the cost to mine a Bitcoin, but their enterprise value will start to change when we see some of the actual from the contract they have with CoreWeave feeding into these results. So from next year, from the beginning of 2025, we'll start seeing revenues from that contract come into play, and we'll see over the next 12-13 years how that impacts the likes of Core Scientific and where they are at the moment. But again, Riot, because of the growth to 36 exahash by the end of the year, and likely to achieve that takes their valuation down to $29 million. So, again, compare the Riots to to a lot of the other ones. IREN again only 35.8 million, because they've got to effectively, if you think about 71.7 is literally double the amount of their future hash rate. They're at 35.8 because they are going to double the hash rate over the next sort of 4 months. So this gives you an indication. Again, it's one metric. Don't get overly worked up. People are saying, "Oh, TeraWulf there." TeraWulf share price has done really well. If it hadn't done well, all these numbers would be a lot lower for TeraWulf as well. But the share price has done really well in comparison to the likes of Riot and Marathon and the likes of CleanSpark over these last few months, significantly better. So, it's impacted that way. And bear in mind, all we need to do now is hear another news story from TeraWulf on a big HPC deal. And again, effectively, it's all, people have forgotten this particular metric, because that will be a game-changing position for TeraWulf. So it's one metric, but what it does say, of the 3 or 4 metrics I've talked about today, if you were sort of like looking at these and thinking, where would I be looking to maybe put money from a value perspective? Riot looks, at the moment, that share price, it looks ridiculously low compared to what they're delivering at the moment. So let's see what the update comes out from August. We want to see a good update. We want to see, we've had a couple of good updates from the last 2 months compared to the last 18, 20 months. But if we see a good update in August, in that same trajectory, increased hash rate with some more energization at their Rockdale facility and their CORZ facility, I think people start looking towards Riot of the pure play miners and saying there's value there.
Yeah, certainly. And we've been talking about Riot really since that Corsicana tour and taking a little bit of heat for it as well, Anthony. Now, next time you do this, I'd be curious to see that same enterprise value to exahash, but enterprise value to megawatts or online megawatts, to try and kind of compare and contrast the different use cases of the power. But very good table, Anthony, and great to see really all of these top miners managing their debt, managing their current liabilities, and building those balance sheets. So great dive into IREN earnings, you guys. We look forward to having Dan on the program in just a couple of days here. We actually have DMG and IREN joining us on Tuesday this week, so that'll be great. Get your questions in. Anthony, a couple other fun news items we wanted to get your take on here. We just had another solo miner hit a block, 3.275 Bitcoin. It worked out to $199,000 US. Essentially, this is buying a lottery ticket, but I'm almost getting to the point I might buy one of those little self-desk miners. We saw a number of them for sale in Nashville. Plug it in and see if I hit the lotto here. What do you make of this?
I think it's it's great. I mean, for people who've just got like one machine, it's a bit of fun. It is like effectively like a lottery because your return, would great unless you've got access to like cheap or free power. Then it's absolutely plug them in. If you've got like really low cost energy, anything like under 4 cents, then plug them in, no matter probably what machine you've got.
I was
Um,
just going to plug an extension cord in my neighbor's outlet, Anthony, and run it under my fence, see if that works.
Absolutely. We did see, yeah, like you said, naturally we saw a few ingenious ones. There's some like, small heaters. So they're a heater, but the byproduct of that is actually use it's a miner effectively, but with a obviously a low hash rate in terms of hash rate. So
Yeah,
but bear in mind you'll get some Satoshis, every month from being part of a pool. So every bit of hash rate, if it's in a pool, gets rewarded at the same pro rata rate as the rest of the hash rate in that pool. So, whereby say like a big miner with 10x hash in a pool would be getting, significant amount of return. Even your sort of like, few terahash would get a equal and proportionate amount based on what you're providing the network. And it's all about all hash rate, providing the network with that stability, making sure all these transactions are audited constantly, so it's self-fulfilling.
yeah.
And yeah, it's an intriguing side. But to be honest with you, it is like walking to a local shop and buying a lottery ticket.
Well, you know what? Christmas is coming. Maybe we'll get some Power Mining branded desk heaters for the holiday months here. But the other thing I wanted to bring up, Anthony, we've been following this. Obviously, the election cycle in the United States, we're now 68 days out. As we can see, this is another post by Quinton. Great account to follow here, you guys. Traditionally, very strong period for Bitcoin. We did note in our last video, September regularly is a red month for Bitcoin, but over the next few months heading into Christmas, seasonally strong period. Anthony, I know a lot of the technical analysis or technical analysts, A-Trades, Freedom by 40, they're expecting six-figure Bitcoin by Christmas. I've seen Michael Saylor's very bullish. Do you think we're going to get this Santa Claus rally, this big bull run heading into the election, heading into that, I guess, sweet spot post-halving?
Um, I mean, as I say, I listen to what the technical guys do. I don't do technical analysis myself, but to be honest with you, there's so many of them quoting now a six-figure price by the end of the year. It's starting to feel more achievable. But we need to see the Bitcoin price move soon. Otherwise, it'll happen next month. It'll happen next month, and next month comes and goes. So that's going to be the challenge. Yeah.
A lot riding on it this year. It'll be an interesting one to watch. As we say, Anthony, we don't guess the price of Bitcoin in a month, in a week, in an hour's time around here, but definitely a lot of the technicians looking at those big bull moves. I do wonder if it's a little bit of herd mentality at some point. If everybody around you is saying six figures, do you just kind of comply and go that route? But time will tell. And finally, Anthony, a quick shout out just to El Salvador, president making major waves down there, getting on the cover of Time magazine. I was just actually explaining this Bitcoin adoption story and how impactful that was to El Salvador's recovery to my family over the weekend. And again, a great example. A lot of times we focus on the investment thesis, where to make money, returns. But at the end of the day, Anthony, Bitcoin is changing the world, and the Bitcoin miners that we cover on this channel are securing that network and making it all possible. So countries like El Salvador really leading the way like this is just proof that this technology and all these miners, everything that we do here is leading to something bigger.
Yeah, no, absolutely. I was fortunate to be on a flight to Nashville with Max and Stacy Kaiser. And so, they're based in El Salvador. They're very much very big in the Bitcoin space. And they were telling me all the things that were going on down there. And there's a lot of education going into El Salvador. And I know that when they announced their take on Bitcoin, that they issued all the residents of El Salvador an actual wallet with a small amount of Bitcoin to get everyone started. Be interesting to see how this turns out, but very, very positive news story.
Yeah, most definitely. I didn't realize Max was from El Salvador, but even more interesting.
Not from El Salvador, but decided to
Based
base
there.
himself there a few years ago. So he does a lot of touring because he goes to all the conferences around the world and he's educating people on Bitcoin all the time. But his base is actually El Salvador.
Gotcha. Okay. And speaking of conferences, you guys, Amsterdam coming up in just over a month's time. Anthony and I will both be there speaking. We'll throw up a promo code on the screen, Power Mining. If you're in the neighborhood, in the region, you want to come visit us, you'll get 10% off your tickets. Anthony, a longer podcast today. I think we went the full hour, a great in-depth dive into IREN's numbers, a very strong year and quarterly result. We look forward to continuing the news this week. Again, we've got Dan and the team from DMG on this Tuesday. Anthony, have a great rest of your weekend. We'll see you back here on Monday.